Jim, you just talked about it with Becky. I was looking through every major component. Nothing fell. Not apparel, month on month, not used cars, nothing.
Well, I think that what's a shame about that number is that apparel's fallen big since then. Used cars have fallen very big since then. We obviously are now stalled in the housing market because rates have gone so high, and the lock-ins are from 2 months ago. So this number is rearview mirror. At the same time, I think that the number is scaring people. And if the Fed acted right now with a big jolt, I think that what would happen is people would say, you know what, it's going to peak, and the Fed is in charge, and I'm less concerned, and we can move on. But right now is a critical moment. You can really knock inflation out right here, except for gasoline. And that's up to the president. The president can negotiate a lower price, but the president has to give in to what the oil companies want. So I'm very bearish about right now, obviously, because people don't realize that there are a lot of components that will be much better. Food will not be much better, but that's obviously transient to some, not to me. And gasoline will be worse. And you have to start going back to when there's been big gasoline step functions up. David, you know that gasoline's very hard to get down unless we get about a couple million barrels more per day. And nobody sees that coming.
Yeah, well, and getting 1 million barrels more a day is going to take a while regardless, but to your point, you believe that it would help bring down the price near term in terms of at least changing the curve a bit. Refining capacity, though, is another issue. We've talked about it, Jim. That's not going anywhere either.
No, and those companies are making fortunes, and they should be careful. They should be careful because they're going to be vulnerable to the congressional investigation that we know is going to happen, David, when we see their quarters. But it should not extend to the companies like the company that you're looking at, which is Exxon. But we do know that the refinery margins are way too high and will draw a lot of scrutiny.
Yeah, no doubt. And listen, you've been saying it over and over again that there needs to be a conversation. It's not completely clear to me that there is no contact whatsoever between these companies and the administration, Jim, but certainly, well, listen, I'd encourage them to just watch our documentary on June 22nd, because you're going to hear from Darren Woods, who leads the most important oil company in the country and arguably in the world, other than perhaps Saudi Aramco. You want to, no dialogue? Listen to what he has to say, because it will give you great insight into how they view the transition, how they view their current place in the market right now as well, Jim. And maybe that's all it's going to come to. But perhaps at some point more of a back and forth conversation between the leaders of these organizations will occur. But again, it's not as though you can just hit a switch. You know that. You can't.
No. And Carl, I'd point out that you have to start going back and looking at the big jumps in oil. The jumps in oil in the 70s, the jumps in oil in the early 80s. And what happens is people only get used to it. People buy, I'm sure Phil the bolt with this, they go electric. We can't meet the demand for electric. They'll start working even more at home. There are ways to be able to get around this, but it's going to take time. And in the interim, Jay Powell should be having a 9 o'clock press conference, 9:10, and saying, look, we've had enough. We're moving right now. We're moving 100. He will not want to do that because he's a little incrementalist, and also because I'm not sure he wants to do shock and awe. But, Carl, right now, the American people want to know that the Fed has got this monitoring it and it's got it under control, and they'll feel better. There'll be less right now worry about recession than the idea that the Fed is not doing enough.